The question is that the bill be read a second time. The honourable member for Wright.
And I thank you, Mr Deputy Speaker, and I rise to associate myself with the comments of the Shadow Treasurer and the member for Wentworth on their support for the Tax Law Amendments Cross-Border Profits Transfer Pricing Bill No. 1. As with all Tax Law Amendments Bill that this government has tabled, it is one which the Coalition will also scrutinise with the intentions and consequences for businesses here in Australia. This bill will seek to provide consequential amendments to the Income Tax Assessment Act 1936 and the Income Tax Transitional Provisions Act 1997. The government seeks to legislate to clarify the transfer price rulings after a decision in the Federal Court recently in 2011. The Commissioner on Taxation's understanding and application of treaty rules for transfer pricing adjustments was challenged in this case. Even though this piece of legislation seeks to clarify transfer pricing rules in tax treaties, there is always a sting in the tail with this government when it comes to taxing Australian businesses. Although it's being stated by the government that they'll have no effect or no impact will result in the budget with the passing of this bill, it's hard to believe that the taxing windfall that will befall the government has not already been apportioned to in the recent tabled budget. So when we revisit that, Mr Speaker, here we have a comment from the so-called experts, the expert advice that we get from Treasury. The Prime Minister in this House on many occasions has referred to the expert advice that we get from Treasury, and we don't have to look too far back with reference to expert advice from Treasury when we look at forecasts of this year's enormous deficit. But in protecting the $1.5 billion surplus as we move towards, this will have no impact on our budget. But then why is it? Why is it that the retrospectivity of this bill is so important if we have to go back to 2004, 2006 and start taxing these bodies on which will be a liability that will be brought about as a result of this bill? As an opposition, we fundamentally oppose retrospectivity. It is the right of any business in this nation to do business, pay their tax bill in good faith, and know that when they start trading in the next financial period, that they start with a clean slate. Start with a clean slate, Mr Speaker. This bill, with the retrospectivity of it, takes the liability, and it's a contingent liability, and maybe those businesses have been applying for it. But the fact that the Treasury is saying that this will have no impact on the budget, on budget revenue, can only mean one thing: that the taxation or the taxation department has already accumulated the contingent liability and brought it into their forward estimates to be expensed and received into this financial year to help save a wafer-thing surplus. Mr Deputy Speaker, I refer to the retrospectivity of this bill, which goes back to July 1, 2004. The Coalition opposes retrospectivity taxation in principle and opposes the retrospectivity of this bill. The Coalition seeks to amend this bill and give that prospectivity effect to the bill, because it's fundamentally what we believe in. It's fundamentally what we believe in. We reckon that if you've paid your tax at the June 30, well, when your tax period was due, whenever it may fall, that it is imperative to the security and the sovereign risk of our nation that is it. You don't go back to have another crack as a government. You don't get to go back and have another crack at it. If this amendment is unsuccessful, we will oppose the bill. You would have contemplated, Mr Speaker, that over the last 8 years, business taxpayers have operated on the existing tax laws of the day, operated within these prevailing laws. To expose them to penalties and retrospective charges from July 1, 2004 is not something that any business should forecast or mitigate the financial impact of current global economic uncertainty. Here we are in a pretty difficult time to try and, from a manufacturing perspective, from a tourism perspective, from a constructive perspective. Yes, with our two-speed economy, our mining sector is going gangbusters, and we do have a lot of things as a nation that we could celebrate. But with the current global financial crisis and the lack of market confidence that exists not only in this nation but across a lot of our other European partners who are suffering at the moment, you do not have to go too far to pick up any of the local papers to read on a continual basis. Jobs are being put at risk. You know, Fairfax putting off 1900. Macquarie Bank put off a heap the other day. Qantas are making announcements. The top end of town is doing it tough, and most of the, not all of them, but some of those companies may be picked up in these retrospective clauses here. Perhaps it's the position of this government and its attempts to deliver a surplus next year doesn't understand that this will have new measures to do foreign investment prospects to this nation. By changing the taxpayer's tax profile and obligations retrospectively may impact and result in financial investment decisions being compromised or worse, abandoned in Australia. Mr Deputy Speaker, recently in this House from a foreign investment perspective, because at the end of the day we thrive as a nation, we rely on foreign investment as a nation. That's how we have managed to obtain the quality of life that we live in, fundamentally underpinned by foreign investment. This government, as you would probably well know, with their foreign investment trust the other day, overnight, with little or no announcement or lead-in time, doubled the foreign investment tax bracket from 7% to 15%. Yes, admittedly under the Howard regime it was 30%, but when we started to drop that foreign investment trust tax bracket down, we gave the market notice. This government did not give that market notice, and as a result, if you're a foreign investment company and you're making conscious decisions as to where you're going to park your funds, and you've got wake up on Tuesday morning, and the government's saying that righto, your foreign investment trust capitalised interest rate has raised from 7 to 15%, and hang on, you may be even up for a tax bill that goes back as far as 2004. Something that I don't think as a nation that we can afford any more of the industry and manufacturing suffers. Something that I don't think as a nation we can afford anymore if the industry and manufacturing sectors suffer further financial pressures both from within and abroad. You can only imagine the adjusted tax bills of some of Australia's largest companies getting a penalty notice adjusting tax obligations for up to 8 years. This figure, Deputy Speaker, could run into the hundreds of millions of dollars. When will this government learn that we cannot tax this nation into prosperity? I think we're now up to nearly 30 new taxes. We need to create a fiscal environment where we've got businesses making profits, because when they make profits, they pay taxes. I believe that these measures in this bill are solely there for the purpose of trying to secure and protect the way-for-things surplus that this government so critically needs to hang on to for political credibility. The transfer pricing rules exist to ensure that taxation is collected on the contribution of profits from Australian operations to multinational companies, and to ensure that profits are not shifted between relative parties across borders without appropriate taxations. Now, I support that in principle. I actually support that. It is not in our nation's interest. It is not in our nation's interest to have businesses that are profiting from either the resources sector or banking sectors or from the financial sector that are making genuine profits here in Australia, and then through complex international housing bodies that they may have offshore, being able to offset expenditure to reduce their tax liability in Australia. I support in principle that we as a nation are duty-bound to secure tax that has been generated in this country here for the benefit of our nation. But as a coalitionist, I cannot support the retrospectivity of this bill, which goes back nearly 8 years. Transfer pricing rulings are contained within Division 13 on the Income Tax Assessment Act of 1936. Australia also has incorporated international tax treaties into Australian law. During the federal court case in 2011, the Commissioner of Taxation considered these treaties transfer pricing rules contained in the treaty as an alternative basis for transferring pricing adjustments in parallel with relevant provisions of the Income Taxation Assessment Act of 1936. In 2011, the full court cast doubt over the second bias for transfer pricing adjustments in Commissioner for Taxation versus SNF Australia Proprietary Limited. While this case was argued only on the basis of Division 13, the government believes that as a result of case Division 13 does not always adequately reflect the contribution to profits from Australian operations to multinational groups, and as such, in some cases, treaty transferring pricing rules may produce a high level of taxation. And whilst that may be well so, to retrospectively assess the tax liability through a change in playing the field, changing the playing field, it's hardly conducive to strengthening business position globally in markets of the contributions they make to the employment of Australians and the tax they have already contributed. The government has already stated during the Senate estimates that it has no idea of the size of the retrospective tax impost and that it has no impact on the budget. But I beg to differ. Of course, they know. They've made account for it to assist in backing up their surplus claims next year. Again, I make the point. Here we have a government that continually makes claims that we get expert advice from the Taxation Department. We get expert advice from the Treasury. I beg to differ. It beggars belief that in this particular case, with a court case that's been going since 2004, hearings went down in 2011, that we have no idea of the size of the retrospective taxed impost that it's going to have on business. Well, I suggest that they do know. I suggest that they do know. Because I tell you what, the businesses who are lining up to pay that tax liability know to the very cent how much they're going to be in for. They know how much they're going to be in for, but I suspect that this government has already made provisions for that to protect their wafer-thin surplus. The Coalition will not support the amendments that forces taxpayers' retrospectivity obligations that did not exist 1 year ago, let alone from 8 years ago. I do not believe that for one moment this government has given any thought to the perceived increase in the sovereign risk of this nation. The argument that was quite diligently laid out earlier on by the Shadow Treasurer in his opening remarks, where he spoke extensively about the sovereign risk issues. Sovereign risk is one of the most critical measures of our position in global economics and the harm caused due to uncertainty to ongoing developments and investment in Australia. Certainty and confidence in the business marketplace are already at lows that we haven't seen for years. That is outside our resources sector, where we have a 1 in 140-year spike in capital investment into that resources sector. But when you take that part of the sector out and you look at our manufacturing sector, you know, our car manufacturers, some of our financiers, they will be affected by this bill. Transfer pricing arrangements in this bill do not adequately address the real issues facing the nation at the moment. The member from Wentworth spoke briefly about the impact of Amazon and Google trading substantial amounts of money in business through Australia and paying relatively low amounts of tax to the nation. Deputy Speaker, as I said before, the Coalition will oppose the retrospectivity taxation in principle. The Coalition will seek to amend the bill to give prospectivity effect to the bill. If the Coalition amendment is unsuccessful, then we will oppose this bill.